Your thoughts on what's been a whole host of numbers and, more broadly, some positive lines, I think, from Tesla versus expectations?
Sure, I think you have to like that cash burn number.
Yeah.
Probably have to dive in a little bit deeper and see, what that number includes or doesn't include. But that's a positive. And I also think too, though, on the other hand, in its growth phase where it is now, it is still important to be investing that. So, the cash burn it has to be there. It has to be happening if they're going to continue to grow and get Model 3 production up to where it needs to be. So, pulling back on the capex and the spending and making it a little bit better number on the cash burn is not necessarily always a good thing in this case.
So most analysts out there think they'll raise, what, $2 to $3 billion this year. And some say, look, they're better off doing that, actually, and just relieve some of the suppressive forces on the share price. Do you agree with that? And do you think they will raise more cash, even if we see a lower cash burn like this quarter?
Yeah, and I think if you subscribe to the idea that they should raise cash when they can, when they need it, that would certainly be the case here. As Model 3 ramps and you talked about the deposit number. They have to work through that backlog. They have to get production up to a reasonable level so they can do that before they start losing deposits. So as you go through that process, you're going to need the capital to do it. You might as well just raise when you can and take care of that overhang.